Great. It's great to be with you all. I'm really excited about talking about AI in my daily work. I spend a lot of time on reinsurance. So I run our reinsurance business at Aegon. For those of you that don't know, Aegon is one of the world's largest insurance conglomerates, and we have businesses in over 20 countries, and we have about 30 million customers globally. We have over €500 billion under management. So it's a big organization, and I run a piece of that business that basically reinsures our global entities across the world. Now, so if you then ask, so what on earth are you doing talking about AI? It's a good question. But what we found is that we get a lot of data with all the reinsurance, right? So think about this. We basically transact risk. With risk comes data. So we basically get the seriatim files from the different units every single quarter. And this builds up to be quite a global view of what's going on in insurance. So I wanted to share a bit about what we're seeing, and then also talk about some of the use cases that we see in artificial intelligence and machine learning. Should also mention we were one of the early investors in H2O. So we have been with Sri and team since the early days, and we're a big fan. We use it in several places around the world. And generally, most of our data scientists will use it from R. So, what's really going on in insurance today? I was trying to think of how to best begin this talk and sort of get my point across. And I think what it really boils down to is that the cost of sensors are decreasing, right? And you're all aware of the sensors in your mobile phones, on your watches, and plus there are a bunch of sensors around us, right? We've talked a lot about facial recognition and other tools that use AI. But the cost of sensors are decreasing, and that really has a really interesting effect on insurance. So we're getting to this point of inflection, basically, where the cost of preventing is actually getting to be cheaper than the cost of indemnifying, right? This is really interesting. So this changes how we think about randomness. Randomness historically would be that a car is driving down the road and something bad happens and the car veers off the road. We assume that's going to happen X% of the time, right? Because that's what always has happened. So we treat that as a random event. But of course, it's not really a random event, right? Something happened. The driver was distracted. He or she fell asleep, a tire blew, the road was slippery, an animal came out. You know, there can be a host of reasons, but it's not really a random event if you think about it. So with the sensors that we're increasingly able to use, and that's increasingly embedded in cars or your mobile phone or other pieces of hardware, we can now basically begin to help the people or individuals prevent. And this is true whether you're dealing with non-life or life, right? So we are basically mainly in life and pensions globally. We do have some non-life businesses in the Central and Eastern Europe and in Portugal and Spain. So as this is happening, insurers, I think it is fair to say, we haven't really done as great a job of responding to this as we probably could. So this whole new industry has evolved, which is insurtech. Still relatively early, so I like to look at Google Trends every now and then. And if you look at Google Trends, you can see that basically, sort of at the end of 2015, the level of interest in insurtech started increasing. But there's a lot going on, and there's a lot of money making its way into this industry. Of course, insurance is a €5 trillion per annum industry, so it's big business, right? And you can see that if you look at all these different startups, they're mostly in the space of infrastructure and sort of back-end servicing or aggregating sites. But as you move sort of around this dial, you get to peer-to-peer solutions. And some of the even some of the reinsurers that are increasingly venturing into this space, basically because, well, like my company, we have those reinsurers also have a global view of data, right, from their customers. So I was thinking, where does H2O fit? H2O is not really an insurtech per se, because H2O, of course, serves many, many purposes, but probably would fit up there in the space of infrastructure and back-end servicing. Just to keep things in perspective, here's biotech and fintech on Google Trends. So you can see biotech still wins the prize, and then fintech is somewhere in the middle, and the blue line there on the bottom is the same as on top. But fascinating space, and we're going to see a lot more happen in this space. The speaker earlier today, in one of the keynote addresses from NVIDIA, spoke about the personalization of healthcare. And insurance is also becoming personalized, right, and data-driven. This is sometimes confused as to violate the solidarity principle of insurance. But if you think about it, that's not necessarily the case, right? Because insurance is already underwritten. So if you're applying for a $500,000 or euro life insurance policy, you will likely need to have blood drawn. But with alternative data sources, that's not necessarily needed anymore. So we may be able to gradually replace some of that. And of course, the data sources are all the ones we've been talking about so far. And what's amazing is how much this has evolved over the past 10 years, really since the smartphone became common property for most people. And on the back of that, all these things have followed. I mean, I don't know how many of you have counted how many so-called health apps there are on the Apple App Store, for example. But at last count, I believe it was something like 300,000, right? I mean, it's just amazing. And not all of them, or in fact, most of them are probably not really any good. But some of them are really excellent. And what they all have in common is they all collect some data about you, right? And they do something with that data. But there's some really amazing technologies. I like the facial scans. There's a company that actually is estimating your body mass index based on your just based on your selfie, right? So that's pretty neat. Your body mass index tells you something about your weight and height and the relation of those two. And it's a pretty good indicator of life expectancy. Not a great indicator, but it's a pretty good indicator. There's another company that actually does a full body image from the front and from the side. And based on that, they actually measure your waist and your hips, your shoulders, your chest, et cetera, and waist to hip ratio is actually not a bad indicator of life expectancy. It's probably better than BMI, but it's a little more complicated to get. Since if we actually ask for it on an application, most people will lie, and most people don't have this particular app. But it's all coming. The Philips technology is amazing. Because with the high resolution cameras, you can basically sense the change in colorization of skin. Right? So I don't know how many of you think about this on a daily basis, but it's pretty amazing. So with a short movie, you can actually tell the pulse of the person, and you can also tell their breathing rate. So all this stuff will simply just mean that there's this barrage of data that's coming in. A lot of it is coming to the insurance industry. And so when Sri, in his talk, talked about the ratio of health to care, right? So basically, the notion that we need to get to a point where we get more bang for the buck in our healthcare system, I think all these things will support that. And insurance is really unique in that, unlike almost any other industry, we're generally better off if people are better off, right? So as insurers, as life insurers, we're generally aligned with people's interests. And this is really interesting. So you could argue government is the same, but outside of those institutions, it's tough to say that there's anybody else that actually directly saves money by doing this. So this means that there's this potential for us to actually subsidize some of this technology and some of these efforts, both for the benefit of the customer and for the benefit of ourselves. There's a neat little device here. You can see the what looks like the jacket with all the notes on it. That's actually an EKG or an ECG, depending on which country you're in. But so is this little thing. It's pretty amazing, right? So this basically works with my mobile phone. It's made by a company called AliveCor. The product is called Cardia, but it does a 2-point electronic cardiogram and it does that over a span of 20 seconds. I just hold it over my phone, and it actually then sends a small current through my body, which is then processed immediately by my phone, and a PDF is created, basically a simple ECG or EKG, and I can then send that to my doctor if I want. But of course, this is also data, so immediately it tells you if there are any irregularities. And this is FDA approved, by the way, right? So this is not a toy. This is the real thing. It's not the same thing as the 27-point or whatever it is they do at hospitals, but it's getting there. But the jacket there, that now begins to be pretty close to hospital grade. So that's pretty amazing. And it's all data, right? It's all data that tells you quite a bit. So my uncle used this, and because his doctor, he was complaining of heart pain, and his doctor wouldn't give him a referral to the hospital. But after his doctor saw the PDF, he sent him to the hospital immediately, and they installed the pacemaker. So amazing story, right? And then it just, these things are going to happen more and more. So the role of insurance is changing, basically from helping you when bad things happen to actually helping prevent bad things from happening. But of course, when they do happen, we'll be there to help people manage. And you can look at the components of the price of insurance, and you can see basically how AI or how this interaction with technology and data can actually help us drive down price. So in particular, by having the more frequent touch points, right? This is a really big potential win, because if you have a chronic illness, for example, most insurers would charge a high premium because there's just no way for us to know over the next 20 years if you're going to manage that condition. But with data, if there's a data interaction, we can now actually see that you're managing that condition, right? All subject to privacy rules, of course. GDPR is important. I'm a firm believer that the user, the customer, needs to be firmly in control of the data. But if the customer wants to share that and benefit from it, that should also be an option. So the whole insurance value chain is changing. And what's so nice about artificial intelligence and machine learning is that it really touches every single aspect. But if you look at the top chart, right, this is basically the way that it used to work. We would underwrite somebody at time zero for the next 20 years, right, or 30 years. And not just that, the way that this process would work is that somebody would do something, then hand it off to the next department, hand it off to the next department, and then after that there's sort of the post-processing. And then the feedback loop would come through experience analysis and actuarial science, but that would take literally years. And I've seen so many times that the trends are changing, but if you have a regime shift, right? So if something fundamental is changing, credibility analysis doesn't get you very far, because it will basically tell you to ignore the data until it's too late, right? If you have a regime shift, you need to basically recognize it immediately. And so we're moving from this very slow animal to this faster animal that actually should be circular, but then it wouldn't fit on the slide. But the bottom really should be circular, the blue part at least, because it really is an ongoing calibration and an ongoing interaction with the customer. And if you then put things like distributed ledger or blockchain, smart contracts on top of that, or robo-advice, and again, AI has a role in all of these things, right? Then I think you begin to get close to something that could be pretty fascinating. And we see many startups, right? We see many insurance blockchain or distributed ledger startups at the moment that are basically trying to effectively, very transparently automate the insurance process. It's more difficult to do with life insurance and some of the more complicated products. But if you're, for example, dealing with plane crashes, it's fairly simple because it's parametric, right? And there's already a database for when a plane crashes or not. So I want to talk about some of the things that we're doing and then how we're using H2O in these different spaces. So calibration, for example, so we used to basically price based on costing, right? Costing means what does it cost me to deliver this product, and I add a margin on top of that, and that's my price. But instead, using more data analytics, we're getting a better feel for what the actual value is to the customer, and as a result, we can differentiate pricing more, right? Which is similar to how most companies actually price, but we've never really been able to do that, and I say we, meaning the industry. Distribution, of course, targeted advertising. Well, this is the obvious one, right? I think there have been a lot of examples in this space, but we also do that, and we also use H2O to do that. Scoring. This, I think, is where we need the most work. So also, if there are any of you that are interested in looking at insurance, I think this is really an area that needs a lot of bandwidth and intellect. But some of the examples would be mortality by postal code. That's fairly simple. That's well used in the UK already. Not so much in other countries. Driver analytics. Most of you are familiar with the devices you put in your car, right? I think I actually have 3 in mine. Only 1 for insurance purposes and 2 for security. But basically, this means that whenever I drive, my driving behavior is being analyzed, and my premium varies as a result. Then there's health by wearable data, right? So this is where we get into some of the new areas, and I think of this as peeling back the onion, right? So if you think of us as an organism, and we're trying to understand this organism, then basically at the periphery, we have the environment. And by environment, I mean, is there pollution? Where do you live? But also, do you smoke? Do you exercise? What do you eat? And you move a little bit further in as you peel back this onion. And the second piece is your microbiome or your bacterial profile. It turns out that we have more bacteria in our bodies than we have cells. I didn't know that, but it's a good thing. And it's a good thing as long as we have a diverse profile of bacteria. And increasingly, with all the microbiome research, which is also very much AI related, we're getting a better understanding of how bacteria relate to health, and in particular to chronic conditions. And then finally, we get to things like epigenetics, which is basically the study of which genes are active and which are not. So even if you have a bad gene, if it's not turned on, it may not be so bad. And then, of course, ultimately genetics. So here I should say I actually think that genetics can be really useful for people, but I don't think we should underwrite on that basis, right? Because it's not behavioral. Most of us are born, at least so far, most of us are born with genetics, and we don't have the opportunity to change them. Yet, anyway. Then there's interaction and advice. I think also this is a really big space for insurance, and we're just beginning to explore this. But it's said that insurance is sold, not bought, right? Probably most of you don't really think about insurance on a day-to-day basis. Probably most of you didn't actually check in with your friendly insurer today, I'm guessing. But this also means that part of that is because we don't have the ongoing engagement, which we can hopefully create with the scoring. But another aspect to that is that most people don't really know what to buy, right? So it's not something that a lot of people feel comfortable managing themselves, which is where the need for advisors arise. But we talked about the Payment Services Directive, or PSD2, the previous speaker mentioned that, or one of the previous speakers. And if you think about actually combing through that banking data, it actually gives tremendous potential for finding out also what the optimal insurance product could be, right? So that's a form of automated advice that could be created. And finally, there's automatic claims. We do a lot with fraud detection, as well as, of course, standard analytics and trends. All right, I have 3 minutes left. I want to make sure that we stay reasonably on time. So I was greatly inspired by yesterday's sessions, so I decided to just throw 2 quick data sets at driverless AI. And for full transparency, I've never run driverless AI before. I mentioned we use R and actually run H2O through R. But I had these 2 data sets. They're just all about derived from public data, but they're data sets that we experiment with from time to time. One is a financial market data set with short-term, long-term indicators. So I'm not suggesting you should all try to predict the financial markets, but the economy sometimes has an impact on insurance as well and on claims ratios. So it's a good thing to look at every now and then. And so put this data set through, and I was really impressed. In about an hour and 15 minutes, the results came up. And again, this is just a very basic data set, just a little test. But it gave me a sense, at least, of what driverless AI could do. And if you look at the different indicators and the relative importance, one of the most interesting things for me, again, it may be obvious to all of you, but was the feature engineering. So if you look at the second indicator in particular, and you can't read it, but it's basically the sum of the annual change in inflation plus the one-year change in the one-year treasury rate, which is honestly an indicator I had never really thought about for financial market purposes. But if you think about it, it basically tells you if the Fed is on the ball or not. So if the Federal Reserve is on the ball or not. Are they chasing inflation and then raising interest rates as inflation is also rising? Then the Fed is behind the ball, right? Or are they on top of it, in which case the sum of the two would be lower. So I thought it was really neat, and honestly I had not thought of it before. It's one of those things that's obvious in hindsight. So again, that just underscores to me that it's a neat tool. The second piece was on all-cause mortality risk scores. And here I wanted to reverse engineer, because we already have all-cause mortality risk scores based on components like body measurements, lifestyle, medical data, medical history. So I wanted to see if driverless AI could pick apart the model. So it's, again, simple data set, and it's a completely different data set, right? The first was a time series. This one is basically a bunch of discrete points, and then the combination of the discrete intervals determine the relative risk score. And you can see it did pretty well, and basically reverse engineered the data set that I threw at it, which for those of you that are curious, tells you that lifestyle is about 2/3 of your all-cause mortality relative risk score. So lifestyle, again, includes smoking, eating, exercise, and whereas medical data and medical history make up about 1/3. I think depending on the research you're looking at, some will claim it's about 50-50. We think it's maybe slightly higher than that in favor of lifestyle. So if you're interested in the numbers, here's life expectancy basically by healthy versus unhealthy behavior. And what's even more interesting is that if you look at life insurance, then if you look at a 20-year life insurance policy, then you can see that it's quite leveraged, right? But this also underscores that there's a good opportunity to actually, if you can move some people from unhealthy up a little bit, obviously with their blessing if they want it, right? Then there's, and part of that can happen through technology, then there's quite a value add to be had there. And with that, time's up. I really want to thank you for listening. Again, a pleasure being here with you all. Thanks.